Hey everyone, I'm Jim Tay. I'm the Country Business Director for Japan for OrangeTee International. So I'm going today to run through with you a presentation that I made a couple of weeks ago during a seminar where I talk about Japan properties. If you do a quick search on the Japan property market, you'll realize that it's in fact very attractive to Singapore investors right now. One of the key reasons, the yen. But that's not all, and in this presentation, I'll be sharing with you more reasons why Japan is a market you should look at, and especially our focus city, Tokyo. Let's dive right in. Follow me on the slides here I have in front of you. If you're listening to this on podcast, I have the link in the description below where you can click to check out my slides. So let's get started. Japan property market, a safe haven in a volatile world. Presented by myself, Jim Tay, the OrangeTee International, short for OTI, Country Business Director, Japan. First, who are we? OrangeTee is part of the Reliant Group, right? And in fact, in May 2014, Tokyu Livable, one of the largest brokerage firms in Japan, they invested in OrangeTee. And you may not know it, but for the last more than 10 years since 2014, OrangeTee has been involved in the Japan business from a B2B standpoint. It was only last year in 2025 around July where we decided to take a step into the B2C segment as we saw growing interest from Singaporeans into Japan. That's where I was appointed the country business director and we started selling properties to Singaporeans. A little more about Tokyo Group if you're unaware. Tokyo Group is a very famous and well-known conglomerate that participates in many businesses across multiple segments such as real estate, transportation, they manage the Tokyo Railway. They also run the hotel and resorts business. Recently, I just stayed at some of the Tokyo hotels, Tokyo Stay in Tokyo and the Tokyo Yokohama Hotel. They also do lifestyle services business. They run retail, they run commercial shops as well. Very large company. And Tokyu Livable is their real estate brokerage arm. They have around 50 years of corporate history. They are a large business and most importantly, very reputable in the brokerage business with the champion in transaction volume in 2023, 2024, and most recently in 2025 as well. We are listed as their subsidiary in their homepage, which signifies a very strong relationship between us at OrangeTee and Tokyu Livable. We have our TLI support team, short for Tokyo Livable. These are the people whom I communicate with on almost a daily basis. They are multilingual. They can speak English as well as Mandarin, as of course they cater to a lot of Chinese and Taiwanese customers as well. So overall, what are some of the key disadvantages of investing in overseas properties? First, we often have lack of local knowledge. Second, it can be a hassle to manage. The third point is uncertain exit plan. It can always be easy to purchase a property, but it can be very difficult knowing how you plan to exit in future. Nevertheless, what are the reasons why Singaporeans still want to invest overseas? First is of course ABSD. It can be very punitive from the second property onwards with rates 20%, 30% upwards, right? Next is long-term plans. We have seen many buyers looking to purchase Japan property, not just for investment, but it can also be a long-term home, a retirement asset. Very often, they also purchase it for their kids who may be studying there or working there. Third is affordability. Later on, I'll share some examples as well, but in Singapore, we know prices are easily hundreds of thousands, easily, right? High hundreds of thousands, in fact, for the private properties. Whereas in Japan, even in prime cities like Tokyo, we can enter from as low as a few $100,000. Would Singaporeans stop investing in overseas properties? The answer is a big no. So how do we here at OrangeTee International turn disadvantages into advantages? We present to you a curated selection of projects and properties. We collaborate with local partners. We have skin in the game. We don't sell something and disappear. We have an office here that you can always come back to. And this is a long-term commitment backed by our shareholder, as I mentioned, Tokyu Livable. Give you a further context on why now is a good time, we have to look at the economic situation of Japan as well. And we talk about the end of zero. Why zero? Because For a good portion since the early 1990s, I recall when I was pretty young, my dad always told me, made in Japan is very good. That was when I believe the Japan economy was booming. Of course, back then I didn't know too much. But if we look at the statistics right now, it is quite clear that during the period from the 1990s, early 1990s, to the early 2020s, it was known as the period of the lost decades. Why? If you search this up on Google, it's because during that period, the Japan economy had a negative inflation rate, right? Pretty much means deflation. So goods in future were becoming cheaper than they were today. That led to a cash first mentality where Japanese, if you also read up, are some of the largest cash savers in the world. To stimulate growth, the Bank of Japan also reduced interest rates to negative, right? That tried to stimulate the growth in Japan. It was only after the 2020s period where inflation started to finally enter into the Japan economy, where we see the rates hit above 2% for the first time in 3 decades. Similarly, interest rates have also been steadily increased. And for the first time since the early 2010s, it also reached positive territory in 2024, right? And right now stands at 0.75%, with a rate increase to 1% looking to be scheduled by this year. This is pretty significant because it shows that the Japan economy has actually turned a corner. And as we know, inflation is widely related to real estate prices. With a positive inflation for the long run, we can be quite certain that property prices, especially land prices in Japan, will continue to trend upwards. Next, of course, and this is very, very big. If we traveled to Japan over the last couple of years, right, we have realized that our dollar buys more today than what it did about 10 years ago. How much more? Well, on average, in the late 2010s, the average yen to Sing dollar exchange rate is around 80 yen cost 1 Sing dollars. But today, you realize that 125 yen costs 1 Sing dollars. That's around a 50% difference in terms of your purchasing power as a Singaporean compared to 10 years ago. At the same time, we look at the Japan Property Price Index. Prices have been on an uptrend since the early 2010s. But yet, if you notice, the peak today now that we see in 2025, 2026 is still far away from the absolute peak in the late 1880s, in the early 1990s, right? That shows that there's still quite a lot of room for the Tokyo, Japan property market to rise. How does this matter to you as a Singaporean? Well, if we just look at 5 to 10 years ago, 100 million yen property costs you around Sing dollars 1.25 million, right? Today, even if the property price is 150 million yen, right, assuming a 50% increase in yen terms, it only costs you 1.2 million yen. That means you're effectively acquiring Tokyo properties at prices comparable to a decade ago. The funny thing is that 10 years ago, if we probably asked you to invest in Japan property, which in fact, having been in this industry for about 10 years now, I did hear about such things last time. But back then, the country was facing deflation. You had low interest rates, right? Persistent deflation means prices were getting cheaper. Why would I be confident to invest in the Japan economy, right? But today, as we have seen, numbers have changed. And later on, I'll show you some statistics as well to show you that it's not just retail investors, but the huge, big global names are seeing opportunity and are pumping money into Japan. In fact, let's just take a look at very quickly. I mean, for those listening on the podcast, I ask the AI tools, Gemini and of course ChatGPT. Right now, these are the tools that we use almost on a daily basis on where are the key cities, the best cities, the safe haven, so to speak, to invest in real estate. And if we see from both of these popular LLMs, Tokyo and Singapore, they rank up top, right? So for myself, I'm very blessed and honored that I'm able to help buyers and work actively in these two very major and safe markets in the world. Not just from the LLMs, we can see in real actual data. In 2025, Singapore ranked number one and Tokyo ranked number two for livability, lovability, and prosperity. Right. At the same time, if we look back at the latest list in 2026, Tokyo in fact jumped up to be ahead of Singapore. Tokyo ranks number four, and Singapore ranks number six in terms of the Asia's best cities in 2026. That shows that it's very, very shared DNA, right? When you invest in Tokyo, you're not just investing in another second tier, third tier city nation, you're investing in a place that has similar shared DNA, similar stability, similar prosperity, similar kind of quality top tier city as Singapore. Let's dive a bit deeper into Tokyo right now, shall we? The demographic reality in Japan, we may have all already heard that Japan is facing an aging population, right? But guess what? In Singapore, our birth rates are actually even lower than Japan's, right? Which is quite interesting. So, how do we how does Japan compensate, and how should we see this in terms of the context of the greater Japan? Well, this is a map that I brought up, right? You can see that in all of Japan, pretty much, I would say 90% of Japan's land, right, is shrinking. The population is shrinking, right? Tokyo, the greater Tokyo area is the only prefecture that is growing, right? And also, it's a large place. It's home to 37 million people, approximately 30% of Japan's population. This stat, it has received 14 times more resident inflow than the second largest metropolitan area in Japan. Do you know where the second largest place is? Right? Leave me a comment. Make a guess. Earlier I mentioned the smart money is moving, right? And they are the companies, they are the big names that have access to multiple levels of data, they have access to researchers that are usually outside the scope of retail investors. We see KKR boost buying in 450 trillion Japan property market. Blackstone commits 15 billion to Japanese real estate, and Brookfield is investing 10 billion in Japan by 2030. These are all headline numbers, but let's look at trends in the next slide. We see real estate transactions in 2009. It's like what I shared with you. More than 10 years ago, would you have the confidence to invest in Japan? Look at the big names. 1.5 trillion yen in 2009, and a very, very strong uptrend all the way to 2025, where it hit the highest in the last 15, 20 years of 42 billion SGD, right? Equivalent 5.2 trillion yen. That shows the confidence that overseas investors, the smart money, have in the Tokyo real estate market, where of course a majority of the transactions happen. You can see even the table at the bottom right, the high value acquisitions by overseas investors. There are a few names there that indicate Singaporean companies. Not just that, in Tokyo there is a supply crunch. It isn't like Singapore where we have controlled land, we have government land sales. In Tokyo, much of the land is privately owned. So we see that new condo supply is at a 50-year low, lowest supply level since 1973. And of course, as a result, new property prices have shot up, which makes, in fact, secondary homes, renovated properties becoming really, really popular right now, right? Which are some of the inventory that we have as well in OrangeTee International. Tokyo is also a property that is really, really very safe to invest in with a very, very high occupancy rate. So as an investor, most of the time we of course we don't use it for own stay, right? So we have to rent out the property. And you don't want the property to be empty. In Tokyo, this fear is minimal because of a high occupancy rate of more than 95% within the Tokyo 23 wards. I have an investor who spoke to me the other day. He asked me, hey, do I have guaranteed rental? Because I mean I'm in the market too. So I myself also see that other cities in Japan they offer guaranteed rental scheme. Then my question is that does Singapore have guaranteed rental schemes? Because truth is Tokyo is comparable to Singapore. If Singapore has the stability and there's no guaranteed rental schemes in Singapore, Tokyo is similar. Why is there a need for guaranteed rental schemes? So whenever there's guaranteed rental schemes, like especially some of the other second or third tier countries, I won't name names here, the key question to ask yourself as an investor is why is there a need for a guaranteed rental scheme? All right. Does it show a lack of confidence in certain areas regarding the property that they have to make it more enticing for buyers? That's a question that you have to ask yourself. All right, so let's look at some comparisons between Singapore and Japan, Tokyo. Tax, like I mentioned earlier, high ABSD for second property onwards. Whereas for Japan, Tokyo, we have a category of products known as leadies, which are the renovated properties like I shared earlier. These are flat, less than 2%, right? Acquisition tax. The tenure, mostly leasehold in Singapore, whereas in Japan, we carry mostly freehold properties, asset owned in perpetuity. Entry price, again, our units here in Japan are highly accessible, starting from even less than 300K. Ownership is something that is really important because in Tokyo, Japan, right now, I wouldn't say it might last forever, but it's equal treatment for foreigners. You buy and own like a local with the similar rules and regulations. So Tokyo provides a simpler, fairer, and more accessible path to prime global real estate. So what's the scale of opportunity in fact for the Tokyo 23 wards versus Singapore? Let's do some comparison here. My slides are a bit jumbled up, but I'll read it off to you, especially if you're listening on the podcast. So in Singapore versus Tokyo, the land is pretty similar. Singapore is around 719 kilometers square, while Tokyo is 627 kilometers square. So the Tokyo core is slightly smaller. In terms of population, though, Singapore is around 5 point something million, whereas Tokyo is around more than 9 million, right? That means 50% more people competing for space. Density, as well, as we say, 8,400 people per kilometer square in Singapore, whereas for Tokyo, 15,742 per kilometer square. Right. Supply as well in in Singapore first, we have around 10,000 new condo projects, and that doesn't even include 20 to 30,000 of public housing, right? Whereas in Tokyo, like I said, it's less than 10,000 new supply a year, which is at its tightest since 1973. But yet, let's look at the price differences. A couple of weeks ago, when I was giving this talk live, I spoke about Tengah Residence, which is launched already launched more than 99% sold. But I realized the price difference. Look at the one bedroom there. It starts from around 980,000. And this is a leasehold property located at what most people would agree is a far outskirts area of Singapore, which needs massive redevelopment over the next 10 to 15 years. Whereas we have brand new properties in Japan, like the ones we are selling at Shinjuku, just 5 minutes walk to the famous Shinjuku MRT station, and the entry prices are less than 1 million Sing dollars for a one bedroom. And it's freehold, furthermore. So these are some of the comparisons that might leave you scratching your head. To sum up, what makes us different here at OrangeTee International and Tokyu Livable, our partnership? Well, we are bilingual and we have localized expertise both in Singapore and in Tokyo. That allows myself and my team to be a trusted bridge because we can understand you here well, your needs as a local Singaporean, and yet at the same time connect you up with what you're looking for in Japan. We also have an institutional shareholder, Tokyo Livable. Hence, our hand holding and our skin in the game is there for the very, very much long term with a very high personalized service and a 360 degrees in-house management, right? Not only do we help you to acquire the property, we also have our in-house management team called the Tokyo Housing List, also part of the Tokyo Group. And in future, we have the Tokyo Livable brokerage agents that can help you to exit your property as well. Here's a buyer's testimonial of a deal we conducted sometime last year. We purchased a property in Tokyo after attending a consumer seminar in end August. We were attracted to a Lydia's renovated unit because of its excellent location, freehold title, and reasonable pricing. We were impressed by the professionalism and efficiency of OrangeTee and Tokyo Livable. When we took over the unit, we were delighted to find it beautifully renovated and in move-in condition. All the more impressive considering we had never seen the interior beforehand. We absolutely love the property and plan to use it as our holiday home for the next few years before eventually leasing it out to tenants. We look forward to returning to Tokyo with our whole family to spend more time there. Well, I witnessed this firsthand, and let me share with you, even till today, right, there are still things in the unit, and the Tokyo Livable team are still helping to follow up. Well, I hope this gives a good introduction. Do follow my channel, follow my podcast if you're watching this on Spotify or Apple Podcasts. I will share more updates regarding property selections, more information regarding the taxes, the purchase properties, the properties purchase flow charts, the cost involved, right, and whatnot. Everything about my own experiences. If you want to find out something, do get in touch with me personally. I'm Jim Tay, the OrangeTee International Country Business Director from Japan, and I'll see you soon.